Hello, I'm Rebecca, and I'm the Manager of Financial Empowerment Initiatives and Data Analytics at United Way of Summit in Medina. I'm here today to talk to you about the importance of the Earned Income Tax Credit. This credit is aimed at helping low to moderate income families. The credit is determined based on how many eligible dependents you have for the credit, as well as your earned income. So income from wages or self-employment, etc. The credit is one of the few government benefits that doesn't suffer from the phenomena of the benefits cliff. So take food assistance, for example. If you take a 50-cent pay increase, and you're now over that eligibility limit for food assistance, it's immediately cut off and you no longer receive that assistance. Well, that pay increase may be worth less than that assistance. You're actually worse off to take the pay raise because of the cost of the value of the benefits that you're losing. The earned income credit does not work that way. So as your income increases, the credit actually increases. So it's an incentive to work and take those raises and try and get more hours at work. The credit then does eventually level off. So as you earn more, the credit actually remains the same. Eventually, the credit does decrease, but it's at a slower rate than your income is increasing. So as your income increases, even though you're losing the credit, it's going to be less than the amount of that increased pay. So you're always better off with this credit to take that pay raise. The credit is one of the most effective ways at helping fight poverty. So it can help lift 9.4 million people out of poverty and help another 22 million. It's also shown to help areas outside of finances. So children in households who claim this credit tend to do better in school. They have increased test scores. They're more likely to graduate and attend college. This credit can also help with infant and maternal health by lowering premature births and maternal stress or stress of the mothers, which has an impact on the way the child develops. It also can help to fight income inequality by supporting single mothers and individuals of color. Despite the amazing benefits EITC has to offer, only 80% of eligible individuals claim the credit. So in 2014, Ohioans left more than $39 million in unclaimed benefits on the table, meaning people that didn't file their taxes were just giving up free money that they could have had. One contributing factor to the reason the credit isn't claimed is that 33% of the eligible population actually turns over every year. So it makes it difficult to do outreach to individuals eligible for the credit because that population is constantly changing. Individuals that are at risk for not claiming the credit are actually individuals without children. So even if you don't have kids and you're between the ages of 25 and under the age of 65, you may be eligible for this credit based on your income. Individuals that don't have filing requirements tend to miss out on this credit as well. Not everyone is required to file a tax return. However, we recommend you always come in or go and get your taxes filed to see if you do have a refund that's owed to you. A couple other populations is individuals with limited English skills and caretakers of individuals with a disability. So if you have someone in your household that's totally and permanently disabled, you may still be able to claim them for this credit, even if you're not providing their financial support. So the rules to have someone on a tax return as your dependent is actually different than the rules to be able to claim someone for this credit. So again, it's always worth it to come in and ask and see if you are eligible for the credit. So you can help us spread awareness about the earned income credit by telling people about the credit and encouraging people to take advantage of free tax preparation services. That way people can get their full credit that's owed to them without having to pay a tax preparer. You actually can also go back and claim this credit all the way back to 2017. So if you haven't filed your 2017 or 2018 taxes, again, I recommend getting those done so we can see if you're eligible for this credit. One last tip is that when you get your taxes done, come in with your entire household so that we can figure out the best way to maximize this credit and other credits related to families.